Well, exchange-traded funds, or ETFs, have fast taken centre in the investing world. Picking the right one, of course, just like any other investment decision, can be difficult. And joining us now to review the performances of some of them is Mike Brown, who's MD of ETF SA. Morning to you, Mike. Just remind us of the ETF landscape, how it works, how many there are, and how much money is involved in these funds.
Morning, David. Gugu. There's 63 ETFs listed on the JSE now, and they cover all the different sectors of the market: local equity, indices, bonds, locally listed property, various other areas of investment assets in South Africa, but they also cover the international markets. You can now get hold of ETFs that give you exposure to all the major international indices. So it covers all the different areas of the market. You have to keep track of how things are doing in terms of performance, and so we have monthly performance surveys, which we produce, and that's, I think, what we want to talk about this morning.
Looking at the unit trust pages. I mean, the first unit trust came about in the mid-60s, I think, Sage. There now is this vast page of tiny writing of unit trusts, and it's very difficult to actually work out what to do. Are ETFs getting like that? It's quite hard to, or are they easier differentiated?
I think they're easier to differentiate because they cover different asset classes, and so you can see which areas they're in. So if you want to buy a sort of listed property, for instance, there's only one or two ETFs that do that, and there's only one or two doing various areas of the local market. So there isn't the same amount of choice. But yes, you've got to look around, and the best way to use ETFs is to put together a portfolio of them that cover, across the different asset classes and the different spectrums of the market. In other words, to generate a balanced fund by using ETFs.
Mike, just taking a look at the uptake of these products, no doubt in the South African market, you've seen a positive uptake to them?
Yeah, they've been going in South Africa. The first one listed in 2000, so it took quite a while to get going, but so did the unit trust industry. But now it's about a 60 billion rand in total, and the hedge fund industry, for instance, about half that size. So it's growing quite strongly relative to other new asset classes.
Well, what's the performance been like? What's the league table, if you like?
Well, we print a league table, so we show the performance of all the different ETFs and unit trusts that are passive managers, in other words, that just track indices. The last year, you should really be offshore. Things like the DBX USA tracker, which tracks the top 600 companies in the USA, or the Euro Stocks, which tracks the top 50 companies in Europe. They're giving something like 50 to 60% return in the past year. But the long-term, the one that's really good is the Satrix Indy, which tracks the industrial index in South Africa. And that's the top performing fund across all unit trusts and all ETFs over the last 10 years, 7 years, and more recently.
But just on that, Mike, this year we've seen our JSE index really rally quite strongly. Wouldn't you say it's been a good year for tracking indices? Yes,
we're in a momentum sort of market. In other words, shares are going up because there's increased interest both locally and internationally in South African equities. And when that happens, you're in what's called a momentum phase. A value phase is where you're trying to buy undervalued shares. At the moment, nothing's really undervalued. If it's a good quality company, it's fully valued. And then your best bet is to buy an ETF, because an ETF just gives you exposure to the top companies on the market.
Why then would not everyone buy those ETFs? And I think one of the allegations against it would be that it tends to average things a bit, and that you get star outstanding performers. One thinks, for example, of a Famous Brands or a Capitec, where if you put 1,000 Rand in 10 years ago, you'd now have about 170,000 Rand. Now, the ETF can't give you that, can it?
Well, if you put 1,000 Rand into Satrix Indy 10 years ago, that would be worth something like 20,000 Rand. So, but that's a good performance in the market. What you're using ETFs for is to give you the average return of the market. And in South Africa, only about 20% on average of active managers can outperform the index. So you've got an 80% chance of outperforming your active manager if you buy an ETF at much lower cost, because you're paying a much higher cost to buy an active manager's selection of shares. So for the man in the street, that's what you really want, is to start developing a portfolio where you get exposure to the market, or different types of markets, at low cost.
I'd like us to touch on the man on the street in particular, because it seems as though ETFs have really afforded novice investors an opportunity to invest in funds. And you've also got a seminar that you've hosted rather recently on stokvels. Tell us a little bit more about that.
Yeah, a lot of investor clubs and stokvels are using ETFs. They don't have a lot of money, and therefore they don't want to just pick one or two shares. If they get one share wrong in terms of their selection, then they could have a problem. So they're tending to buy unit trusts or ETFs. ETFs are much cheaper for them. They can invest from 300 Rand a month on debit orders, or from 1,000 Rand lump sum. So that it's made for those types of investors. And we go to the townships now. We did one in Soweto last week, and this past Saturday in Mamelodi, next Saturday in Tembisa.
But do they understand it, Dave? I've noticed that, especially with the BEE schemes as well as investment opportunities that they have available, it's the fundamentals. They don't understand what a dividend is. They don't understand how to trade exactly. Is that maybe an obstacle in the way that...
It's a little bit of, but I think some of these clubs are more sophisticated than we think, because they read and stuff's available on your programs and on TV and on newspapers and so on. So they are slightly more sophisticated than we think. And but what they want is, most stockfills just have their money sitting in the bank, and that's going backwards. So now they want to invest. So more and more of them are calling themselves investor clubs rather than stockfills. And that's where ETFs can play a big role for those types of investors.
You said when we started talking about the stockfell, they haven't got a lot of money, but if you look at the combination of money, I don't know how many stockfells there are in the country, what the estimate is, but it's certainly thousands.
Well, the estimate is over 40 billion rand are sitting in stockfells and investor clubs.
Total is a lot of money.
That's really big, yeah.
As I understand, the stockfell is you give money to the stockfell before you do anything else every month, and then your turn comes to get some money. So it's a simple concept. So is the ETF actually a simple concept?
Yeah, the typical stockfell is everybody puts their money in the new share. 1 month you get all the money that goes in. But now increasingly stockfells are saying, well, maybe we can save a bit more and over and above that. So if you had a stockfell and they all there were 15 members and they put 100 Rand a month in, the calculation I do is that after 3 years, that 100 Rand would have grown to 90,000 Rand by putting it into a balanced portfolio of ETFs. Now after that 3-year period, they can sell that, those shares and share out the 90,000 Rand, which gives them some capital. So increasingly we've seen, but the same thing with individual investors. They can also invest from 300 Rand a month or from 1,000 Rand. And so we very much the bottom-up type investors. The new generation investors are perhaps wary of stock selection, wary of unit trusts, which is very expensive, and ETFs are playing into that new generation type investor.
And just on cost structures, is it a bit difficult to remain competitive? Recently we saw Signia coming into the market where it charges a standard fee of 40 basis points and mentioning that they are the leaders with regard to that pricing.
Well, that's in the retirement fund space. And I haven't seen there's nothing available at the moment. They're talking about it. But we're also in retirement funds and we're charging 35 basis points for the product. But you've also got to administer that product. You've got to have an administrator behind it, and you've got to have trustees and so on. So our overall costs in the retirement business is 1.35. I think that's the lowest in the industry. Signia will have to see. But 40 basis points for the product. ETFs you're paying only 35 basis points for the product. But there's different cost structures. But retirement funds are different to, here we're talking about discretionary investments. You can put your money in, pull it out any time you like. Retirement fund, of course, you're stuck there until you're 55 years or older. But that's a completely different market. Retirement funds in South Africa are massively expensive. The government's just done a survey, and I think we're the most expensive country in the world, even more expensive than Bolivia and places like that for retirement funds. So there's big space in the South African industry to bring the cost down of retirement funds, and ETFs are perfect to use in retirement funds.